Mining production increased by 0.6% year-on-year in December 2023, fueled mostly by PGMs and coal miners. Siobhan Redford, economist at RMB, joins us now to analyze what this data indicates for the nation's economy and for a forecast of trends expected to play out in the industry this year. Thank you so much for your time, Siobhan. Now, this is the third consecutive month of growth in terms of mining production, but this time it was actually more tepid than the other months, 0.6% year-on-year. And I actually even noticed that on a monthly basis, it actually slowed by 4.2% compared to the rise that we saw in November and December. Was this a seasonality thing since it was December, or something deeper?
So when we look at something like year-on-year data, it helps us strip out the seasonality. So it's not really a seasonality factor because, you know, when you think about it, you've got kind of the same things happening in December last year and this year. And that's why we like looking at these year-on-year numbers. So I think really what it is that, you know, we did have, I think, you know, a drop in inventory sufficient to allow, you know, to allow your mining production companies to increase their production in November. But then, you know, what really probably impacted December is the fact that towards the end of November, we suddenly saw the logistical issues with our ports, which meant that anything that they did produce, even if they could get it to the ports, was going to sit there for a very long time. So my suspicion is this really is a response to the continued logistical issues in you know, in the country.
Yeah, now that I actually think about it, you're right, because even counters like Kumba Iron Ore were actually saying that they had to drop production to accommodate the logistical problems that we got there. And we know, obviously, even those logistical problems in November filtered through to the retailers as well. Now, the commodities that were produced the most are PGMs and coal. Interesting, because those are the commodities that have been under pressure in terms of price for a long time. Is there a link on any level between the pricing and production here?
I don't think we're seeing a particularly strong link. I mean, there is a point, you know, I think of, you know, there's a certain amount of production that needs to be made to ensure that you still have a regular income.
Yeah.
You know, that you're able to cover costs or, you know, at least, you know, minimize how much you're making a loss at. So, you know, there is a reason to continue production. But, you know, I think it really is a case of also bearing in mind that our production hasn't been particularly strong, you know, for the last couple of years. So some of it could also be a bit of a recovery from slower production in an earlier phase. And, you know, we do see, despite the fact that prices are low, you know, a kind of base level of demand for these minerals. And so, you know, there is still demand. And so there's still a reason to continue to produce them. I mean, you know, if you speak to people, you hear about, you know, the kilometers long, actually, truck kind of queues at the border on the way to Mozambique with coal. You know, so there's definitely still demand and there's definitely still a reason to be operating, but it is not an easy time for your mining industry.
It was quite interesting to look at the yearly data because in 2023, there was an output decrease of 0.4%, which was better than the 7.2% reduction in 2022 and 12.7% decrease in 2021. Is this a sign of some resilience in the mining sector?
Resilience, or maybe even just kind of, you know, that bottoming out.
Okay.
So, you know, I think there's a certain level kind of demand for you know, steel and such like that. We are seeing you still have quite a bit of, you know, investment, say, in alternative energy, and it's not just South Africa, but around the world. And, you know, there are still things being built, there are still structures being built, even though we do hear generally of challenges. And that means that there is going to be still a demand for our minerals, our commodities, just perhaps not at the same pace. And so maybe we're just kind of reaching that base level of demand.
Yeah. I actually also looked at the mineral sales data, and the biggest positive contributions there came from gold and iron ore. No surprises there, right?
Not in particular. I mean, gold continues to remain kind of one of those minerals or those metals which is popular, particularly in terms of protecting wealth. And there is some concern, and we know a lot of volatility has been seen in global markets recently. And I think also as we go into this year with all the elections and a lot of geopolitical unrest, that there are people who are going to choose kind of those safe haven assets. Again, as I was saying, still a lot of demand for iron ore from a structural or kind of perspective. So definitely not a major surprise.
All right. Well, as we wrap up the conversation, Siobhan, the budget speech is next week. And of course, we'll be getting the latest figures on tax revenue. And of course, the miners are a very important part of that. Looking at the state of mining right now, the mining industry in South Africa, what kind of impact are you forecasting in terms of its contribution to the fiscus?
Well, so what we have seen is that, your corporate income tax collections have fallen quite dramatically. We do see CIT collections of significance related to, among other companies, but specifically your mining companies in June and December, and those have come down quite strongly compared to previous years, especially if we think not even last year, but the year before, where you really had quite strong prices. And, we're not expecting that you're going to get the sudden surge in demand. We think that, trend growth is remaining weak around the world. We have a high interest rate, so there's not a lot of demand from consumers in that perspective. Limited policy interventions, especially like when you look at somewhere like China. And so commodity prices aren't about to take off. Demand is not about to take off. And so, I think we're going to see a similar story in the next fiscal year as we saw this year.
All right. Well, thank you so much for your time and just outlining the state of the mining industry for us, Siobhan. That was Siobhan Redford, economist at RMB.